Always a hot topic.
Yeah, yeah. This is Ted Romer with Fort Recovery Insurance. Ted, thanks for coming over to join us here this morning.
Thank you for the invitation, Dave. Appreciate it.
So how much has the insurance business changed here over the last few years?
It continues to evolve, just as Doug alluded to with the technology that's affecting farm machinery. Technology eventually trickles down into our industry also, and the insurance products have to continue to evolve to adjust for those advancements.
So if there is an area of insurance that has changed the most on the farm, what area would that be?
Well, and that's one of the reasons why I brought a special guest along with me today, Dave. We've always felt that it was a privilege to be able to serve the farm community in some small way by supporting their business through our business. And while we appreciate the trust that they've placed in us and our expertise and knowledge, we don't claim to be the true experts. We rely on the people that are behind us, the carriers that we represent. And that's one reason why I've kind of passed your invitation today along to one of those experts, Mr. Jeff Wilson, who is the manager of the farm department at State Auto Insurance Company, one of the companies that we represent.
Oh, very good.
And he's definitely got a pulse on the industry with 20 plus years of insurance experience, but also a lifetime of farming experience.
All right. Jeff, why don't you make your way up here and Ted, I want to visit with you a little bit more here. For folks not familiar with Fort Recovery Insurance, give us a little bit of the history.
Fort Recovery Insurance, as it is today, was a merger of two different insurance agencies in Fort Recovery that were long established. The original Raby agency that became the Raby Franke agency with Herb Franke in there. His son, Steve Franke, who's here with us today, was an integral part of that operation and its future. Steve just recently retired after 43 years in the business. I was fortunate enough to have been given an opportunity to join Steve about 21 years ago, and have since become a partner in the business with Bob Myring and Chuck Hine, and Steve just recently retired. In 2000, our agency merged with the Hine agency, which was another long-established agency there in town. And so today, the Fort Recovery Insurance Agency is a merger or conglomeration of those two agencies. And ironically, both of our agencies had represented State Auto Insurance Group or Meridian Citizens Mutual Insurance Group in some capacity. So when we brought the two agencies together, it was a good fit for them also. You are
certainly, as was mentioned, in a very, very large agricultural area.
Oh, definitely. Yeah, the egg business that we write is definitely the largest portion of our book of business. And we understand we are in an agricultural producing area, and that needs to be a primary focus for us, not just necessarily from the property and casualty and the liability standpoint. I personally do a lot of individual health insurance, which is a hot topic in any industry, but it definitely affects a lot of the self-employed farmers over there with the National Health Care Reform Act on the forefront.
We'll come back and talk about that here in just a moment. Jeff, glad you couldn't make the drive down here this morning.
Thanks for having me.
Let's talk about insurance on the farm. What's going on today? What are some of the areas that we need to be thinking about that maybe we haven't thought about in the past?
As Ted had alluded to, insurance has tried to keep up with the advances in farming. The sheer value of machinery is probably the biggest change I've seen over the years. And we had an executive that once summed it up for our group in saying that you do understand that Jeff's group insures a $350,000 combine going down the road, which is in value more than most of the homeowners we insure in the nation. And that opens up a lot of eyes, just the value of that. And I think we focus a lot on ensuring that the equipment in the buildings. And what we lose focus on is some of the outside areas that farmers are exposed to, the stuff that can really start tapping into your assets and what you've built up for generations. A lot of the farms that we deal with are multiple generations, and so we can sit and put a value of $350,000 in a combine. We know that when the Whole Brothers when you purchase from them, you know the purchase price, that's what you're insured for. Technology-wise, with the GPS systems, the auto steer, everything that's there, you want to make sure you have the proper coverages for that, because that can be a very integral part of your farming, that if you lose that, and our planning windows are so small that you need to recover quickly, and you want the insurance product that's going to be able to do that. I think the most overlooked one, though, that I see most of the times when we're talking to farmers is the liability side. With such a small percentage of today's population involved in agriculture, even grew up in agriculture, they don't understand what we do. And so in this area even, you'll find that whether a confinement operation or a grain farm, you'll have neighbors come in that know nothing about country life. And when they don't like the dust, they don't like the smell, they don't like the amount of traffic in the spring and the harvest, the one thing they think about is, how can I fix this problem? It's usually through the courts. And so we try to sit down with our clients and give them the proper coverage they need for that, whether it's a nuisance case, whether it's an on-road collision. It's to give the proper coverage so you have the defense cost, and also if there's damages, to be able to protect your farm and your assets from future generations.
I want to ask just here real quick, is it unusual for an insurance company like State Auto to have a farm department?
Yes, and just like anything else nowadays, with such a small percentage of that population involved, it is. And what we have found, and I've been with 3 companies now, and it's varied from company to company, but we find that having a standalone farm department, we have individuals that understand what's going on in the nation. We have 21 states that we do business in. It's kind of, I do some farming on the side. My seed salesman likes just to hear about my travels, because whether I'm from North Dakota or Texas or in Connecticut, the first question out of his mouth is, so what do the crops look like? And I'm like, pick a state. And so for us, having a standalone farm department, we understand what's going on in the nation. That allows us to be proactive, to support our agents like Ted at Fort Recovery, to have the products, but also to know what's coming up. Last year with the drought, brought a lot of unique things on the insurance side too, that we had to be aware of. So, having that expertise, and then the people we bring in have expertise. They've been on farms, they understand farming, they understand the plows, cows, and sows. So that's why we like to have the specialty line of business there.
So how often should a farmer sit down at the kitchen table with his agent to go over what their coverage is currently and what maybe they need down the road?
Annual reviews, absolutely. Bigger operations, I would say, you need to be probably every 6 months. Because think about where we were 4 years ago, 5 years ago. What was the value of corn and beans? What was the value of cattle and hogs? So you've insured those at that value. And say back then you had $3 corn, $8 beans, whatever it was. Now look at where you're at. So if you don't update your coverages, because this is such a fluid industry, and we rely so much on outside forces in the commodity markets that we're one of the few industries that really, we don't set our price. So you need to make sure that your insurance coverage is adequately protected. And not only we're talking property and casualty, but like Ted mentioned, the Health Reform Act that's coming up can impact a lot of farmers too. And so you need to have a professional like Ted who can come in and give you that advice you need.
One other question when it comes to the farm side of things. Are there some special coverages available that we maybe don't think about?
Yes. Some of the coverages that I think are underutilized, and Ted had discussions with me about that, is equipment breakdown is a fairly new coverage to the farm market, and what that provides for you is mechanical breakdown coverage. And so if you're a grain farmer, a lot of the coverages will include coverage for GPS. So electrical arcing is the big thing you might be concerned with. So if you got a GPS unit that's $25,000, $30,000, if you think about the whole process, that could give you that additional coverage for that. And then a lot of that is mobile. So you've got a unit that can go from a tractor when you're planting to the sprayer in the summer to the combine. So you want to be able to have that coverage for mobility too. ATVs, UTVs, it has become an integral part of a farming operation. Depending where you're at, the laws vary on that from a liability standpoint. We talk about liability again. I know I just bought a four-wheeler, and I know how much that cost. But in our county, I'm seeing more and more farmers that the pickup stays in the barnyard. We're allowed to drive our UTVs and our ATVs on the road. And so you go from farm to farm, or if you go uptown for a coffee stop or breakfast, they usually are driving their UTVs. And that liability side, you gotta make sure you have protection on the road. It's not the same as on the farm. And then for the confinement operations, anyone that's involved in livestock or confinement operations, there's a big change in that, I think, for us over the past 10, 15 years is going from people that own their own livestock, whether it be hogs or poultry or cattle, to where they don't own the animals. They're just raising them, so they get paid for a fee for raising them. So there's an exposure there, what we call contract growers, and a third-party care custody control type of situation that you want to have coverage for. And then when you're down and out, so you have a combine fire, tractor fire, and Whole Brothers, comes out and gives you an estimate on the combine. You have 3-4 days to finish harvest. You can't wait for that combine to be fixed. So there's an extra expense coverage that's available that allows you to have some dollars available to rent a combine, lease a combine, so you can get through that harvest window. Grain dryer catches fire, you can bring a portable dryer in. And then with the value, as I said, combine's $350,000. A lot of younger farmers, to help pay for that, are doing custom farming now. So they'll go out and do, whether it's planting, combining, or spraying. There's a new exposure there that you go out and you're spraying other people's fields. You have to have coverage for that.
So will that coverage, that same coverage, cover, say if they're spraying and they get some drift over into a homeowner's lawn or fruit tree or something?
Yes.
Will it cover that?
Yes, that's what you want to look for is what's called overspray coverage or chemical drift. And this time of year, that's one of the biggest, what we would call pollution events. So for us, we look at that as your intended use of that chemical was to kill the weeds, the fungicide, whatever you're using for that particular field. If it would drift into another person's area, that's a pollution event because it's unintended in that area. So we've had some claims over the years where it's exactly that. It's an orchard, which are typically the most expensive, but we've had even landscape claims where a small home is on the road frontage of a field, and you'll take out some of the shrubbery they plant or some of the trees. So there's an exposure there also.
Ted, let's come over to you and talk about healthcare and the changes and what it's going to mean to these to the farmers.
Sure. I think right now there's probably more fear and speculation out there than there is knowledge and information, so that's kind of unfortunate. Of course, the National Healthcare Reform Act passed back in 2010, and portions of that have been phasing in ever since then. The biggest portion of that most people are probably hearing about, thinking about, is the guaranteed insurability for adults age 19 and over, which is scheduled to take effect on January 1st, 2014. There's a lot of speculation right now as to how that's going to be implemented, how that's going to be enforced. You hear about different government options and programs out there that will play into the picture. Inevitably, when these things happen, and I've been in the business long enough to know that the insurance industry has to kind of sit back and wait to see what's going to happen from a regulatory standpoint, to see how this stuff's going to be enforced, to figure out where they fit into that picture. So that's kind of where the insurance industry is right now. People often come to me and ask, okay, how's this going to affect me? I heard this in the news, I heard that. In my opinion, there's still a lot of things that are up in the air. We should be seeing more concrete information coming forth here in the next couple of months as the August 1st deadline rolls around here for companies to have products and rates filed. The bottom line is the legislation that passed this healthcare reform is called the Affordable Care Act. From my personal perspective, it appears that it may be everything but affordable. It may be more readily available, but the affordability portion is yet to be seen. When healthcare reform passed in 2010, one of the immediate things that took effect was guaranteed insurability for dependent children under the age of 19. And the insurance industry had to kind of scramble to figure out how that was going to work with adverse forced placement forced upon them. And some of the companies, their initial reaction was, okay, we're just not going to cover any dependents under the age of 19. Quickly realized that that wasn't real reasonable to be able to insure families without offering coverage for their children. So the end result was that by the January 1st of 2011, we started to see the dependent portion of the premium on those family plans double. And I'm kind of fearful of what's going to happen here with this next phase when they apply that same guaranteed insurability to adults. Worked with a lot of my farm clients over the years who naturally are self-employed, and providing health insurance coverage for their family is a key component, making their operation successful. I've worked with a lot of clients that have had that factory job, and they're farming on the side, they're growing, and they'd really like to leave the factory and farm full-time. But securing that health insurance piece has always been an integral part of making that work. And I can't say that I'm convinced at this point that the National Healthcare Reform Act is going to make that any easier for anyone.
So with all of these unknowns right now, what are you recommending to your clients?
Well, right now, I'm reminding people that if your action plan is immediate, where you need to do something, we have to play by the rules that are in place as of right now, with the understanding that a lot of those things are going to change. Some of the companies are offering grandfathering opportunities where if you buy a product today that's not necessarily healthcare reform compliant, you can retain that grandfathered status, for a period of time. Other companies will probably automatically adjust their products as of the first of the year to make them healthcare reform compliant. Just from what I've seen in the past, with the initial rounds of the healthcare reform, when you give up that grandfathered status, you may gain some additional benefits that have been mandated, be it wellness benefits or expanded limitations, and the cost of the coverage goes up as a result. Everybody knows there's no free lunch out there except for free breakfast here with you this morning, Dave. So there's still a lot in the air right now. Like I said, the companies that I represent won't be putting concrete information out there for another month or two to know where they're going to fit into the industry. I work primarily with individuals and families. We have done some group health insurance coverage in the past. And organizations like Hall Brothers with 35 employees, they're going to be affected by this also. There's going to be certain mandates that are going to apply to the employers and to a lot of companies that support our farming industry.
Steve, I think you retired too early. You should be digging into this right now. Or did you maybe retire at the right time?
I think so.
Well, let me ask, those of you here, any questions for Ted or Jeff that you'd like to ask? Anything come to mind? John?
We haven't talked about crop insurance. I assume your agency sells crop insurance. With the current status of the Farm Bill, we're getting mixed directions about the future. Any thoughts? We're going to be planting wheat here in probably the next 60 days or so. Is there a program out there without a Farm Bill?
Yeah, unfortunately, I'm not going to be able to really address that question for you because our agency does not write crop insurance. That was one of the things that we kind of phased out when we merged the two agencies together back in 2000. That had already become a very specialized field in the insurance business, and we partnered up with another agency where all they did was crop insurance exclusively, and they've since taken over servicing our clients. But State Auto doesn't write crop insurance either. And like I said, that's gotten to be a very specialized niche in the market. I know there's a lot of you out there that have participated in the crop insurance programs, and from what we hear, I mean, those programs have been beneficial and successful. I see Bill Toby smiling back there. He's probably had some experience with that. I'm going to say that there's probably others sitting out here that are going to be more experts on crop insurance than either one of us are today.
Yes, sir.
Is the old catastrophic type policy going to be able to be fit in, take that as health care instead of getting every little nick and corner? It was cheaper. Now maybe that'll explode.
Right. Yeah. Anymore, you know, I guess the word catastrophic can have a pretty broad definition. You know, for some people, catastrophic is a very high deductible major medical plan.
Yes, that's what I'm talking about.
Okay. In reality, for me and for the business that I do, that type of policy has become the standard over the last 5 to 10 years. You know, an average $5,000 family deductible upwards to $10,000 or $12,000 has gotten to be the norm. And most all of those policies, of course, the new ones that are being written are healthcare reform compliant. The older policies may be grandfathered, but you would have to look very closely at that policy to understand, okay, what benefit do I retain by keeping an older grandfathered policy versus what potential benefits can I trade up for by giving up that grandfathered status. The older grandfathered policies are supposed to have more, I don't want to say rate stability built into them, but as far as your rate is concerned going forward, there's more measure of control that is required on the insurance carrier's part. Now, anybody that's carried individual health insurance at all in the last 5 to 10 years may laugh and say, what rate stability are you talking about? The health insurance industry probably averages 20% a year over the last 5 years. If our wages were increasing at that rate, maybe we could absorb that, but that's not the case. So that would be my advice to anybody. If you are carrying your own health coverage and you're presented with an opportunity to essentially exchange your policy for a healthcare reform compliant plan, make sure you understand what you're trading off, what you're giving up under your older grandfathered catastrophic plan versus what you're picking up under a healthcare reform compliant plan.
Any other questions? Ted, one other thought just came to my mind. You're in Fort Recovery, Ohio, right on the line. So you have clients on both sides, Indiana and Ohio.
Right.
Does that present its own set of challenges?
It definitely does. It forces us to stay on top of our game because the insurance rules and regulations do vary from state to state. Not only the insurance rules and regulations, but also state laws. As Jeff alluded to a little bit ago, the ATV and UTV exposures in Ohio, I believe it was in July of 2011, they passed a law, under the Ohio Revised Code, that made certain ATVs and UTVs subject to motor vehicle registration. And we had to really take a hard look at that because most of the, not only farm owners policies, but even a lot of homeowners policies that previously had included premises liability for the operation of those type of vehicles on your own personal property, the definition or the language in the policy stated that this coverage would extend to non-registered, non-licensed vehicles. Now all of a sudden that UTV that you have on your property meets the definition that's now subject to motor vehicle registration and therefore excludes that coverage under the policy. That's something that we deal with in Ohio, but at this point, I'm not aware that they've passed that type of legislation in Indiana. A lot of our carriers, like State Auto, have kind of taken, I don't want to say a loose interpretation, but have taken the position that if it's a unit that is there solely for the purpose of servicing the farm, they're likely to continue to extend coverage for that on the farm premise. That still does not give any coverage off of the farm premise, which we all know most of our large farm clients aren't farming one location, they're farming several. And as Jeff mentioned, those ATVs and UTVs are used more frequently than the pickup truck to get back and forth. So they're definitely on the road. and that's an exposure we have to take into consideration from one state to the next. With health insurance, each state has their own governing body, the Department of Insurance, that regulates the health insurance also, and there are differences in the way that health insurance is underwritten from one state to the next that we have to be aware of too.
Yeah, unique situation when you're on a state border.
Yeah.
Yeah.
It's a unique situation, but it also presents a lot of great opportunities, and we always like to think we're in God's country here either way. So,
I couldn't agree more. Jeff, any final thoughts that you'd like to share?
No, I think we've covered most of the areas.
Ted, anything else?
we just scratched the surface, but we're always available for further conversation. So.
All right, very good. Any final questions for Jeff or Ted that you'd like to ask? Gentlemen, thank you.
Thank you, David.